All right, let's jump right into it. The crypto market is in a state of absolute panic right now. A mind-boggling amount of money has just been wiped out, and the fear in the air, well, it's palpable. So just how scared is the market? Well, the Fear and Greed Index has plummeted to a score of just 15. Now, to give you some context, that's not just fear. That is extreme fear. We're talking about a level of panic we usually only see during catastrophic events, like the COVID crash or the whole FTX debacle. And look, this isn't just about feelings or sentiment. This fear is backed by cold, hard cash. A massive $4 billion has been pulled directly from Bitcoin and Ethereum, the two biggest players in the game. An outflow that big, well, that's the kind of thing that doesn't just nudge the market, it shoves it. So this brings us to the $1 million question, or maybe the $4 billion question, that every single investor is asking right now. When you see this much red, this much fear, do you run for the hills? Or is this one of those rare, stomach-churning opportunities that the pros are always waiting for? Let's break down what's really happening under the hood. First things first, this sell-off is not just a bunch of random retail traders getting spooked. No, the engine driving these huge numbers is a massive wave of institutional pressure. We're talking about Wall Street, and they are selling. We need to know why.
The new US Bitcoin ETFs are seeing an exodus of historic proportions. And just look at these numbers. BlackRock's fund alone saw over $500 million walk out the door in a single day. That's a piece of a nearly $3 billion outflow for the month. And here's why that's so important. When people pull money out of these ETFs, the fund managers are literally forced to go and sell actual Bitcoin on the market to give them their cash back. That creates this intense, direct selling pressure that pushes the price down.
So why are all these institutions getting cold feet all of a sudden? Well, the timing here is everything. This is all going down right before two absolutely massive macro events. First, the Fed's FOMC meeting minutes are coming out, which will give us clues about future interest rates. And second, we have NVIDIA's earnings report, which is a huge bellwether for the entire tech sector. And you know the rule. If tech starts to look shaky, riskier assets like crypto are usually the first to catch a cold. And if that wasn't enough, you have analysts like Arthur Hayes pointing out that global dollar liquidity is contracting. Now, the simplest way to think about that is to picture the global supply of dollars as the ocean tide. When the tide goes out, there's just less money sloshing around. And when that happens, investors have to sell their riskiest holdings to raise cash. And for a lot of big players, crypto is still at the top of that list.
Okay, so I know it sounds pretty bleak, but, and this is a really important but, it is not all doom and gloom. If you actually look past the scary headlines, you start to see these pockets of incredible strength and innovation that tell a completely different story.
What's so fascinating right now is that we're really seeing a tale of two markets. On one side, you've got the story we've been talking about. Bitcoin is taking a beating from ETF outflows and these big macro headwinds. But on the other side, a totally different narrative is playing out, one of resilience, where some specific altcoins and new crypto sectors are actually thriving.
So get this, at the exact same time that money is pouring out of Bitcoin ETFs, it's actually pouring into brand new institutional products for assets like Solana and XRP. And on top of that, you have this real-world asset, or RWA sector, that's really picking up steam. Platforms like Ondo are becoming a magnet for regulated capital that wants a safe way to get into the crypto space.
But we have to be really careful here, a major word of caution. In a risk-off environment like this one, where fear is through the roof, capital does one thing: it flees to safety. Money is running away from the smaller, more speculative projects and consolidating into the blue-chip assets with solid fundamentals and a clearer path with regulators. For the smallest altcoins, this environment is extremely dangerous.
So, with all this chaos, how in the world do you navigate it? Well, we need to stop looking at the daily charts and zoom out. We need to look at the long game, which is being quietly shaped by one incredibly powerful force: regulation.
Here in the US, we are seeing a massive shift in how regulators are thinking. The old way, what people called regulation by enforcement, which was basically suing first and asking questions later, is fading. It's being replaced by a new focus on actually building a clear, predictable rulebook for crypto. And for the long-term health of the industry, that is a huge, huge positive.
And it's not just the SEC. You're seeing these positive signals from all over. The OCC has basically given banks the green light to hold crypto for their customers. Global banking committees are softening their harsh rules. It all points in one direction. Crypto is slowly, but surely being woven into the fabric of the traditional financial system.
Okay, so what's the smart play here? Now, obviously, this isn't financial advice, but here's a framework for how to think about it. First, keep your eyes glued to those key metrics, the ETF flows and the fear index. Second, if you're a long-term believer, moments of extreme fear like this can be a great time to dollar-cost average into your positions. And third, now is the perfect time to do a portfolio health check. Take a hard look at your altcoins and ask if they have what it takes to survive a storm like this.
So here we are, at a major crossroads. History tells us that moments of extreme fear can mark a true market bottom, but with these serious macro storm clouds on the horizon, nothing is ever guaranteed. The answer to the question on your screen right now is going to define this next chapter for crypto. The only question left is, what move are you going to make?